Good afternoon, traders. This is Tony D from the easyMarkets Sydney dealing room. A little update after yesterday's huge crash in the stock markets. Everyone's wondering what's going to happen next. Well, the market stabilized and we did have a significant rally. As soon as the US session came in, there was a bit of uncertainty before the US traders got there. How is this going to play out? What is going on in the market? But basically, the selling that we're seeing, and a lot of it was driven mostly by liquidations out of some big funds that got cleaned out completely. A lot of funds that were what we call short volatility in the market, so they were betting against any sort of big moves. As soon as the moves started to get bigger, they had to cover, and then eventually they literally went to zero, and so they had to completely get out of all their positions, and that led to a continuation and a spike. That happened after the market closed on Monday night, which led to the Tuesday morning ravaging in the markets, and it took basically for the US stocks to open again last night, see that the world wasn't falling apart, that damage was limited to a few $1 billion here and there, and then we saw this huge rally back up. One of the biggest rallies in terms of size that we've ever seen intraday. The market went from negative 500 to positive 500, and that's never been done before, so it's a significant day. Now, is the market out of the woods just yet? Well, not really. We haven't broken above any key levels, and while stabilization is very good, the new volatility actually is a double-edged sword. Once you have a lot of volatility, then it's harder for a lot of big fund managers and a lot of big funds out there, big banks, to invest as aggressively as it was before, because according to their calculations, the chance of a big downside again risk, like we just had, is higher now. Even if that can't happen again because it's been cleaned out so much to the downside, the actual computers don't know that, and they will still say that the reading is that the market is more dangerous now, so the risk has to be less. Now, that'll be across the board with all the hedge funds, and traders may be a bit skittish, so the damage could have been done psychologically. While the fundamental story is still very good, a few days of selling here would definitely open up the door to a bigger correction. So it is important how the market reacts. Really need to see us back above 25,000 and stable, and people start to react to positive news again. If we start to ease lower slowly, that's actually a pretty dangerous sign in this sort of market, because in terms of corrections, this was a small one. The size of it, while 10%, it can go a lot bigger than that. And the market was due a big pullback, so we're definitely not out of the woods yet. But it does look a lot better today than it did yesterday. So what's happened with the currency markets? How does this affect the currency markets? We did see reversals in nearly every one of them. As soon as the stocks market started to rally, you saw the euro, the Aussie, and the pound all bounce from intraday lows. But the follow-through hasn't been there in the stocks or the Aussie just yet. So basically the fate is linked to what happens next in the stock market. If we do get a resumption of the uptrend, you will get a resumption of US dollar selling. The US dollar buying basically is on safe haven, so you do need to see the stock start to fall if you are a US dollar bull. The market's in no mood to buy US dollars just on the basis of its fundamentals alone. And the Fed raising rates in March is no longer a certainty, and it could actually become a little bit less certain as well if the volatility continues. And that's just the nature of the beast there. The Fed rarely raises rates when the market's volatile. And what happened in the last 2 days definitely qualifies as volatile. So if that doesn't settle down, then the chances of the Fed raising rates gets less, which means the US dollar gets weaker. Just the way that interest rates affect the currency. We did have the RBA on that note yesterday, and they were in no rush to talk about raising rates. Really had a little to no impact though, and the market was focused on such bigger things happening out there. Basically, they kept the outlook very similar. They did have a little bit more of an upbeat note on the expectations for this year globally, and so there was some positivity there, but definitely was in no hurry to talk about rate hikes, or still saying that we do have to get inflation a little higher before we can get there. All right, now in terms of what's coming out next 24 hours, or what's important, the RBNZ, the brother of the RBA, also inflation fighting bank, is coming out tomorrow morning. Now the RBNZ's got a bigger problem. They've got a much bigger inflation problem than Australia, and that was outlined in the CPI numbers came in for last quarter, released a couple of weeks ago, where there's a huge miss. So the RBNZ has a really strong chance here of coming across a little bit more dovish than the RBA. Now, what's interesting about that is that the Aussie Kiwi uh, has a relationship with stock markets in that when stocks are going down, so does Aussie Kiwi. That's been the case for the last 10 years or so, that correlation. Now that stocks have gone back up and you've got the RBNZ coming up, then this little breakout is one of the less convincing ones we've seen in the past. There's no real fundamental story here, and the divergence between the two economies is actually a divergence towards the Australian economy over the New Zealand economy. So the Aussie Kiwi down here is relatively cheap on a fundamental basis, and it seems more of a technical break and also just opportunistic timing here that it did fall before the RBNZ came out. If we were to break back above this 108.50 level on a dovish RBNZ, then the range which has been holding for the last 6 months could come back into play and could become a tradable trade idea to stick back into the range towards 110. But we do have to see what the price action is like tomorrow, and we do have to get back into that range. But if you want more information about a trade like this, and also just talk about what's going on in the market, what's moving it, and what to be looking for tonight if you are trading, come through on the dealing room contact below. If you're not a member, you can contact us on the numbers below, and we can talk about what is required to get a dealer like myself assigned to you to assist you with trading each day. And also, if you want to come to our seminars where you can learn, we have a crypto seminar tomorrow night with Jimmy Pan, very good crypto trader. I can help you with questions. We do have Ripple and Ethereum trading live now on the website with very favorable trading conditions.